Recently, I updated you all on my current investing portfolio. So in this video, I want to explain how I'm going to be investing for 2025 in general, but specifically right now, because there's been a lot of movement in the market recently. I also want to update you on a bunch of new things going on in my life personally, because I've had a bunch of big changes. The first huge update that I'm excited to share is that last year at the end of December, I finally asked the love of my life to marry me, and she said yes. I've been seeing a couple of you in the comment section saying I needed to put a ring on it, so there you go. Another huge update has to do with my professional life. In all honesty, in 2024, I had a very good year. My relationship with my fiance was great, my YouTube channel kept growing, my businesses through YouTube and outside of YouTube have been doing amazing, jiu-jitsu was going well, and my career as a professor was great. The problem was that my plate was just way too full. It's a good problem to have, I guess, but still a problem. Each year, my fiance and I pick a word that we want to focus on for the year. And for 2025, my word is balance. In order to have balance in my life, I needed to free up work a bit, so that means that I had to make a cut somewhere. Over the past couple of years, I've been so blessed to see this platform here on YouTube and you watching just grow like crazy. I started this channel the same reason why I started teaching back in the day, which was that I actually care and I want to help people. I feel like I've been blessed with a gift to be able to make complicated things seem a little more simple, or at least help people to understand things. Since this channel has grown so much, and since my private coaching business has grown to where I helped over 300 clients last year, I started to notice that I'm actually making more of an impact here rather than just confined to the four walls at my university. Simultaneously, one of the universities that I was working with was changing up a lot of things that I didn't necessarily agree with. I believe that these students aged 18 to 22 are in a pivotal point in their life where they need more than just book knowledge and formulas. They need real-world practical knowledge and specifically personal finance information, but this university was being a little bit more strict on what could and could not be taught in the classroom, and so along with some other bureaucracy and other political things that I just don't care to be a part of, it was clear that my season at one of these universities was definitely coming to a close as God continues to open this opportunity here on YouTube and in my businesses elsewhere. So I decided to resign at one university to pour more of my time into the research for these videos and into helping my personal clients. I still am a professor at the other university, and this quarter's going great. Another big announcement is that I became an investor in and helped open a jiu-jitsu gym called Mission Jiu-Jitsu in Riverside, California. This is going to help me with my word of balance because honestly, I feel the best when I'm working out and competing. So this is going to give me so much more peace to be able to train more frequently and be able to build a community that I'm able to foster and grow. I used to own a CrossFit gym for about 10 years, and I sold that about 3 or 4 years ago. And while I'm happy that I did that, I do definitely miss that gym atmosphere, and so I'm excited for this new venture. If you're down to get some rolls in and you're ever in Southern California, you definitely need to come check us out. We have 3 stud professors who are all black belts and who have taught me so much. Do us a favor and follow us on Instagram here at Mission with a couple underscores and then Jiu-Jitsu, like it shows here on the screen. We'll be opening up officially late January, so come check us out. Now for my portfolio and for investing now and through 2025. To remind you, here's a clip that I did from a video a couple weeks ago. A high yield savings account makes up 3%. The cash on the side for my business makes up another 3%. The crypto side of the portfolio makes up 12%. Real estate is about 23%. The growth section is 18%, SCHD or the value/dividend part is 18% as well, and then foundational for the S&P 500 is 23%. Crypto was never meant to take up that much of my portfolio, but like I said, I've been investing in it for about 6 or 7 years now, and it's appreciated a bunch, especially lately at all-time highs. And so at the end of this bull market, probably sometime in the middle of 2025, I'm going to cut that in half, take those profits, and put that into the 3 ETF portfolio. And in that video that I'll link to down below, I go into exactly what I invest into, especially the different percentages of each thing within my Roth versus the 401k versus just the brokerage account, and all of those different things. So if you're interested in that to see the full breakdown of all of my investing, check that video out. For now though, the stock market has been pretty negative, or at least sideways at the beginning here of 2025. In the first couple days of 2025, SCHD is down. The S&P 500 is pretty flat. Microsoft is down. Palantir's down big. It's pretty safe to say that the start of 2025 is a little bit hectic and investors don't really know where to invest or when to invest, and we're all kind of waiting for some big event to happen. Well, there's definitely a reason why SCHD and some of these dividend yielding ETFs are down. Stocks dropped under the weight of rising yields in the bond market, which jumped immediately after the release of encouraging reports on the economy. US employers were advertising more job openings at the end of November than economists expected. Activity for finance, retail, and other service businesses grew much faster in December than expected. The Fed began cutting its main interest rate in September to give the economy a boost, but it's hinted a slowdown and easing is coming. The threat of tariffs from Trump has raised worries about possible upward pressure on inflation, which has stubbornly remained above the Fed's 2% target. So basically, such positivity for the economy is good in general, but not necessarily great for investors who are looking for lower prices. And the bigger one is that expectation of less rate cuts over 2025, which is going to mess with the stock market just a bit. This has already sent longer-term treasury yields upward. So have worries about possible Trump policies such as tax cuts, which could swell the US government's debt and likewise push yields higher. Those higher yields make treasury bonds more attractive to investors who might otherwise buy stocks, which in turn puts downward pressure on stock prices, and the super safe bonds are paying notably more. The yield on a 10-year treasury climbed further to 4.68% from 4.63% shortly before the release of the reports and from just 4.15% in early December. Those that are frustrated with SCHD's lack of growth need to understand that at this time, this is normal. If investors can get a similar yield by putting money into something that's actually a little bit safer and is going to be much more stable, where it's not an equity, it's a bond, they're definitely going to put their money there because of that perceived almost no risk, but still getting a high yield like that. SCHD and dividend yielding ETFs like it will definitely take a back seat during this atmosphere. This should be good news if you're a long-term investor and you're looking to accumulate more shares. This is the time to buy when prices are low and stable, and then eventually when they go up, you're going to look like a genius that you were buying in at this time. You know how when a stock or an ETF goes up in price and then you say, oh man, I wish I would have bought more back then when I bought at this price? Well, this is that time for SCHD and for ETFs like it, so don't make me tell you I told you so in a year or two. I'm continuing to dollar cost average big time into SCHD, but I'm also dollar cost averaging into the rest of my 3-fund portfolio with SCHD, VU, and QQQM/SCHG. I'm also adding big time to Berkshire Hathaway, which has been down a little bit over the past couple months as well, because people are probably frustrated that Warren Buffett has a bunch of cash off to the side and he's not really using that to buy into companies and to grow, but he's being very smart and he's waiting for the correct time and he's going to jump in on something. And those of us that have been investing in that company, especially when it's been down a little bit, are definitely going to reap those rewards. On the flip side of that very safe Berkshire Hathaway, I'm also dollar cost averaging into a little bit more risky of one called Palantir, because that one has a crazy PE ratio up over 300, and it's quite speculative at this time, but I really believe in it in the AI world. Let me know what you're buying and investing in early in 2025, and watch either of these two videos to keep you going strong in your investing journey.